Welcome back. You're still in the audit report playlist here at Let's Talk Audit and Assurance. So, previously, we were able to talk about the standard unmodified report, where we pointed out what are the different sections of the standard unmodified report as outlined in PSA 700. We then proceeded to talk about the additional paragraphs, EOM or emphasis of matter, and other matter paragraphs or the OM paragraphs, where we pointed out that these additional paragraphs, while considered to be a modification to the report, does not actually have the power to change the opinion. Ergo, the presence of the EOM and OM does not modify the opinion. So, right now, we are finally going to talk about the actual modifications to the opinion, where we also previously pointed out that when an opinion is modified, this will automatically result to a modification in the report as well. So let us start by recalling what are the different kinds of modified opinions of the auditor. Now, we said whenever the auditor decides to modify his or her opinion, it must be because either the financial statements are materially misstated or there is an inability to obtain sufficient appropriate evidence, which we know is called scope limitation. So once the auditor is able to identify the presence of one or both of these reasons, the auditor will then proceed to judge or pass on his auditor's judgment on the pervasiveness of the matter. Now, perhaps the question we need to ask at this point is, what do we mean by pervasiveness? How do we know that the effect is pervasive or that the matter is pervasive? So, thankfully, our auditing standards have provided us with a guidance on this one. When we talk about an item or the effect of a matter being pervasive, it actually means, number one, that it is not confined to specific elements. By this, we mean it is not isolated to a specific account title, transaction, or even event. So, in the words of the Bisaya, magtakod-takod iyang effect. So, the effects are contagious. Now, you cannot confine it to a specific element. Number two, if, however, it is confined, so in the instance that it is confined, it could represent or actually represents a substantial portion of the financial statements. And to the question of the how do we know that it represents a substantial portion? Well, again, this is where the auditor's judgment will come in. Now, what if the violation or the scope limitation is in relation to disclosures? How do we know that it is pervasive? According to our standards, it will be considered pervasive if it is related to fundamental disclosures or those disclosures which are deemed fundamental to the understanding of the financial statements. So, ergo, after determining that the two reasons are present, one or both reasons are present, the auditor will then judge on whether it's material and pervasive, and from there will modify his or her opinion. So, in the case of when financial statements are materially misstated, and it is material but not pervasive, meaning to say it's possible to be isolated or that it does not represent a substantial portion or it's not a fundamental disclosure. In this case, the auditor can give a qualified opinion. And we recall when we give a qualified opinion, that means we are saying the financial statements are fairly presented except for. And this exception is not enough to overshadow the entire FS. At this point, we now get to understand why we are saying it is not enough to overshadow the entire FS, right? Because the effect, although material, is not pervasive. Okay, meaning to say you can still isolate the effect of this particular material misstatement. Similarly, we also made mention in cases whereby there is a scope limitation or an inability to obtain sufficient appropriate evidence, and the scope limitation has a material but not pervasive effect, or it is material but not pervasive. In this case, the auditor can still give a qualified opinion. So, as what you may have noticed now, a qualified opinion may be given regardless of the reason for the modification, provided that the effect is not pervasive, provided that it is material but not pervasive. The qualified opinion will readily and willingly volunteer to be given, regardless of the reason, for as long as the effect is not pervasive. However, the moment that the effects are both material and pervasive, the auditor will now have to choose between what we call an adverse opinion. And when we say adverse opinion, we are technically saying that the financial statements are not fairly presented, or a disclaimer of opinion, which we said is the auditor's version of a no comment. So in this case, when we talk about adverse opinion, it can only be given if the financial statements are materially misstated and the effect is also pervasive. In this sense, we would see that the auditor was able to conduct a satisfactory audit. And by virtue of the procedures that the auditor was able to perform, the auditor saw that the financial statements are materially misstated and that the effects are pervasive. Meaning to say, it is now able to overshadow and take over the entire financial statements. So, in this case, the auditor will give an adverse opinion. However, in instances whereby the auditor was not able to carry out a satisfactory audit, when would the auditor not be able to carry out a satisfactory audit? Well, when there is a scope limitation that is so material and pervasive that in effect the auditor was not able to perform an audit. And if you were not able to perform an audit, the best thing you can do is to give a no comment, right? So this no comment comes in the form of a disclaimer of opinions. Technically, when the auditor disclaims an opinion, the auditor does not give an opinion on the financial statement because of the fact that the auditor was not able to perform the audit. Now, we also recall what we said at the start of this playlist, that in the case of a disclaimer of opinion, you have to determine what is the reason for the scope limitation. If the scope limitation is by virtue of a material and pervasive scope limitation, by virtue of management, meaning to say this is something imposed by management, management has willfully restricted the auditor's performance of the audit, then the auditor must first try to resign from the engagement or withdraw from the engagement. In instances where the auditor is not allowed to resign or withdraw, then the auditor gives a disclaimer of opinion. So these are the modified opinions. And we said any modification in the opinion automatically results to a modification in the report. So let's now try to see what will be the effect of these modified opinions on the auditor's report. So here I'm going to present, or we are going to present a cross comparison of the three different types of opinions: qualified, modified opinions, qualified, adverse, and disclaimer, so that it will be quite easy for us to visualize what will happen to the standard unmodified report. So let's start with the very first section, or the very first part, and that is, of course, the title. Now, remember, in PSA 700, we said the title should clearly indicate that it is the work of an independent auditor, and thankfully, regardless of the type of opinion that you give, the title will remain the same. So there are no changes to the title. The second major section is the addressee. And we said we should, or the audit report should be addressed to the appropriate addressee, normally the board of directors and shareholders. And again, no matter what type of opinion, it will be the same addressee. Okay, so no change there. The third major section, or not really a section, but if you recall, there was a subheading, right? The subheading report on the audit of financial statements. And we said in the first video that this subheading will only be present when the auditor also has other reporting responsibilities. So if the auditor does not have any other reporting responsibilities, this subheading will not be present. And this will be the same rule regardless of the opinion given. Now, the first very crucial, major section of the audit report is the opinion. And we recall that the opinion section is actually made up of two paragraphs: the introductory paragraph and the actual opinion itself. Now, we also recall that if the opinion the auditor is giving is unmodified, the heading may just be opinion. Okay, so just the word opinion. Otherwise, the heading will have to specify the type of opinion. Ergo, whenever the auditor modifies the opinion, the heading to the section opinion will also change to identify what particular opinion is given. So if this is unmodified, the heading will be opinion. But if it is qualified, the heading will be qualified opinion. If it is adverse, the heading will be adverse opinion. If it is disclaimer, the heading will be disclaimer of opinion. So the heading will change. It's the first thing that will change. Secondly, because this section contains your actual opinion, then most definitely proper wording should be used to indicate the opinion that is being given. For example, in the case of the qualified opinion, the auditor must state that the financial statements are fairly presented except for. Now, take note that the use of the phrase except for is the appropriate or is considered appropriate. Compared to, for example, if you say subject to or because of the foregoing explanation, so that sounds less forceful. So in our PSAs, the correct terminology or the appropriate phrase to use in the case of qualified opinion is except for. In the case, for example, of adverse opinion, then the auditor must state in the opinion section that the financial statements are not fairly presented. However, in the case of a disclaimer of an opinion, we will not only see a change in the heading, but even the introductory paragraph will change. Would you recall that in the introductory paragraph, we will say, we have audited the financial statements of. But remember, if you are disclaiming an opinion, you are saying that you were not able to perform a satisfactory audit. Therefore, you cannot say we have audited. Because the truth is, you have not audited because your scope was so limited, right? So, therefore, we will change the first statement. Instead of saying we have audited, we will say we were engaged to audit. And then proper wording is used to indicate that the auditor is disclaiming an opinion. Okay, so notice in this first parts, in the first few parts of the auditor's report, it is the opinion section that will encounter the first major change when the auditor also modifies his or her opinion. So let's move forward to the other sections. So after the opinion section, if you would recall, is the basis for opinion, right? And this section is present regardless of the type of opinion issued. Even if you give unqualified opinion, this section will still be present. Now, salient points raised in this section as a review of PSA 700, which is the first video that we had in this playlist. Salient points are reference to the PSAs, reference to the auditor's responsibilities that are found in another section of the auditor's report, auditor independence, and of course, compliance with the Code of Ethics, and then that we have gathered sufficient and appropriate evidence to serve as a basis for our opinion, right? So, therefore, when we talk about modifications to the opinion, the section will first start with a description for the reason of the modification. Because remember, this is the basis for the opinion section. So, therefore, this is where we outline the basis for the qualified opinion. Similarly, the heading will still indicate as well the type of opinion. No? So similar to the heading in the opinion section where we already said qualified opinion, adverse opinion, disclaimer for opinion. So here we will also say basis for qualified opinion, basis for adverse opinion, basis for disclaimer of opinion. And the section will start with a description of the reasons for the modification because we have to let the readers be aware of what is the basis for our modification. Then it ends with a statement about the sufficiency and appropriateness of the evidence to support, this time, the specific opinion. So we have gathered sufficient and appropriate evidence to support our qualified opinion, to support our adverse opinion. Okay. Now, this is also modified as appropriate to draw prominence to the CAM section in case that there is something in the CAM section that the auditor would like to draw prominence on. But then again, whatever is in the CAM section should not overshadow your basis for opinion section. It's kind of like just to point out that there are other matters pa in the CAM section. And this is true as well with regards adverse opinions. However, in the case of a disclaimer of opinion, we again recall we have not actually done any audit. So we cannot say we have gathered sufficient and appropriate evidence, right? The main point where we're giving a disclaimer of opinion is we were not able to gather sufficient and appropriate evidence. So therefore, in the disclaimer of opinion, in the basis for the disclaimer of opinion section, we will simply include the description of the modification. We take note as well that in the case of a disclaimer of opinion, there are no CAMs. There will be no key audit matters, which we will go to that later. The next section is the MURGC, or the material uncertainty relating to going concern. Now, we remember that previously, historically, the MURGC used to be one of the many EOMs, but now it is given its own spotlight. So we now have a paragraph, material uncertainty relating to going concern. Now, we also recall that this will only form part of the report if necessary, and we consider it necessary if, number one, the use of the going concern assumption is appropriate, and number two, there is a material uncertainty, and this material uncertainty is adequately disclosed. Regardless of the opinion given by the auditor, the use of the MURGC remains the same. So, after the going concern paragraph, or the MURGC, let's talk very quickly about emphasis of matter paragraphs. Although we know that the placement of the EOM and the OM will depend on what it wishes to point out, but for purposes of this tabular comparison, let's just place it after the MURGC. We recall that EOMs are intended to highlight something that is found in the notes. Okay? And this should not be a modification to the opinion, nor should it be a CAM. So if it is an EOM, it's just an EOM. It cannot be a basis for modification, because if it is, it needs to have its own place. It cannot be a CAM, because if it is, it has to remain with CAM. Okay? So same as the other opinions. So whether qualified adverse or disclaimer, the rules on EOMs remain the same. In the case of key audit matters, we recall that these are matters of utmost significance and are required at a minimum for listed entities, although the audit firms themselves may volunteer non-audit, non-listed clients to still undergo, or to still include, no, or to still have key audit matters in their reports. But at a minimum required for listed entities, these are matters of utmost significance. Whether the report is unmodified or qualified, the same rules would apply. Whether it's unmodified or unqualified or adverse, the same rules would apply, but we are especially reminded to make sure that the CAM should not overshadow the adverse opinion. The financial statement should not be deemed more credible than it actually is, no, because of the CAM. So it should not overshadow the adverse opinion. But take a look at this one. In the case of disclaimer of opinion, there will be no CAM. There is no key audit matters to report in the case of disclaimer of opinion. Why? Key audit matters are matters which the auditor paid particular and special attention to during the audit. They are matters of utmost significance. We remember again, in a disclaimer of opinion, we technically have not been able to perform a satisfactory audit. So there will be no CAM under disclaimer of opinion. In the case of other matter paragraphs, again, we recall this is used to highlight something not found in the notes, used to highlight something about the auditor's responsibility or the presence of other auditors, and it should not be the subject of a CAM as well. And regardless of the opinion, the rules on the other matter paragraph remain the same. So moving forward to the other sections, when we now talk about the auditor's responsibilities for the financial statements, would you recall that we said this is the lengthiest portion of the auditor's report? It is so lengthy that our standards are giving us options as to how to present it, either on the face of the report or as an appendix to the report, or maybe a reference to an authoritative website. Did you recall that one? So this time, when we talk about qualified and adverse opinion, it's going to be the same rule as PSA 700, or the standard unmodified. It will still contain the reasonable assurance, okay, or it will still mention reasonable assurance, it will still mention the sources of misstatements, and it will still give a mini lecture about the auditor's responsibilities, including a mini lecture in the audit process. However, the moment that the auditor gives a disclaimer of an opinion, this section will be modified to indicate that the auditor was unable to obtain sufficient and appropriate evidence. In this case, the auditor also makes a reference to their independence, because in certain instances where the auditor is not independent, but the auditor is not allowed to withdraw from the engagement, the only opinion that the auditor can give as well is a disclaimer of opinion. Okay, but that's not all the reason. That's not the only reason why an auditor gives a disclaimer of opinion, right? So, regardless, the auditor will make a reference to his independence in the case of a disclaimer of opinion. In the case of report on other legal and regulatory requirements, we have a heading for this, right? The heading will be other reporting responsibilities, okay, or report on other reporting responsibilities. And we recall this is the heading that will trigger the heading on the report on the audit of financial statements. Regardless of the opinion given, the same rules will apply. Similarly, in the case of the name of the engagement partner, this is with harm's way exception, same as all the other opinions. Signature. Signature could be in the name of the firm or the personal name of the auditor or both, and same, regardless of the opinion given. We recall again in the Philippines, the SEC and the BIR requires the report to be manually signed. The address is the jurisdiction or the location of the auditor's practice, no change, it will be the same. And the date is the date upon completion of the field work, or technically when the auditor was able to complete the essential procedures, including as well, we have to ensure that we do not date the report unless management has approved the financial statement. So ideally, management first, then auditor next, remember? Or in practice, it's normally the same date, right? So same rules would apply regardless of the opinion given. So we have just effectively outlined and compared what will happen to the different sections of the auditor's report depending on what particular opinion is given by the auditor. And that one will, well, complete our discussion for this segment of the playlist on audit reports. We have just talked about the modifications to the audit opinion and how it will affect the audit report, how it will modify the audit report. But this is not yet the end of the story for audit reports, because up next, we're going to talk about what will happen if our audit report is included as part of other information, or what will happen to our responsibilities when comparative information is presented. We are also going to talk about what about audits of Group FS and the use of special purpose frameworks. So all of that in the next video. So stay tuned here at Let's Talk Audit and Assurance, the audit report playlist.